Hello everyone and welcome to today's webinar. My name is Alex Paul from InvestorStream and I'll be your host today. Joining us is Macarthur Minerals Chairman and CEO Cameron McCall and Consulting Project Manager Joe Phillips, who will provide an update on the company's operational and corporate progress. Cameron and Joe will provide a short presentation on this progress followed by a Q&A session. You can download a copy of the presentation by navigating to the handouts pane in the control panel. But for now, I'd like to throw it over to Cameron to kick things off for us. Cameron, the floor is yours.
Good. Thank you, Alex, and welcome, ladies and gentlemen, and welcome to Macarthur Minerals. I'll start by getting straight into where we are, and then I'll ask Joe to give us an overview of the project, which he's been handling for the last 15 years. But post the feasibility study, which was completed in 2022, Macarthur's board has been focused on identifying a strategic partner for the acquisition of the Lake Giles magnetite project. Now, that has come about. Joe and I did a tour of the United States and through various financiers, and one thing that became very clear to us is that there's plenty of money for these projects, is that we needed a strategic partner or to pass the project on to another owner. We took that seriously. There was no point in Macarthur going out itself to borrow $1 billion to build it. They're too dilutionary and it's not in our wheelhouse. It's not our field of expertise to do that. During 2022 and 23, we've entertained 3 major potential partners and acquirers for the project. They've been in our data room for virtually 2 years. We'd narrowed it down to one party. We had exchanged confidential term sheets and so on. That party sort of touched the brakes towards the end of last year and said they would come back to us in January. They did, and they said that they were basically putting a moratorium on acquisition of magnetite projects for the time being. Now, that is the very reason why the decision to delay the rights issue was made. We had every expectation that in the first quarter we would be completing a transaction and there would be no need for any financing at all. So we've left it virtually to the last minute to do the financing, and that was simply to benefit all shareholders, if we didn't really want to dilute anyone, which brings us to the objective as to why we've decided to finance through a rights issue. A rights issue is non-dilutive if you take up your rights, and we think we've priced it accordingly, that it's very attractive for shareholders. In addition, we will give an attaching option, and I'll go into that a little bit later. But it's important to note that our primary objective is to maximise return for shareholders. As such, the specific form will be determined at an appropriate time and aligning the interests of shareholders once we get an offer. There's a couple of, after Joe's finished his side of the presentation, I can tell you a way forward, which we are dealing with a couple of things to bring some early money into the company. The capital raise details is you will get one renounceable right for every 5 shares to raise up to 3.3 million. We've priced it at 10 cents, which is well below where the stock has been trading, but because it is a rights issue, it's very attractive because it's only open to shareholders in the first instance. It's renounceable, so you can trade your rights and you can actually apply for more than your quota. And in the absolute discretion of the company, we will decide where any of the excess might go. Together with the right, for every 2 new shares that you get, you will get one free attaching new option exercisable at 25 cents for 18 months. And the whole rights issue is being managed by our lead manager, Mahi Capital, and they are on the line today. So there's a potential upside here. I will throw to Joe now to walk through the project, and then I will come back and talk about the real value proposition in this rights issue.
Thanks, Cameron. Can everyone see me? I hope they can. Look, can you jump to slide 3, please, Alec? Okay, so this is a little bit about the value proposition of Macarthur. I won't talk to every point in the presentation, but as you can see, we've got a very substantial magnetite asset, 1.3 billion tonnes. We've actually taken it as far as we possibly can over the last 15 years. I've taken it from a greenfield site to an optimised feasibility study for the production of a generational supply of iron ore. We've also done a study in 2014 in relation to some hematite, which still has the potential to be exploited in the company. During 2022, I had the opportunity and some time when I stepped away from the role, the day-to-day role, to look at Lake Giles nickel. And again, we put a press release out identifying a very significant anomalous nickel project that lies across the tenement areas as well. In addition to that, we've also got some DSO quality iron ore up at Strelley's Gorge and also at Tambura North, assets in the Pilbara which do create value. And during 2021, we also spun out Infinity Mining, which I've been looking after as well in the Pilbara. So look, there is some upside for the company. There is a lot of value that has been buried within the company, which is not being currently reflected in the share price. And just a word on the market, since January, the iron ore price has been sliding. It dropped 7% last week. That's principally driven by a softer market for iron ore and construction in China. Let's hope that doesn't continue, because what we have here at Lake Giles is one of the most advanced pre-development resources in West Australia. Next slide, please, Alec. Our region has emerged. 14 years ago when I started, there was only one mining company in the region, that was Cleveland Cliffs Natural Resources now, and they were exporting their products through the port of Esperance, and you can see the rail network there. That high density rail network still exists. It has capacity to be utilised, as well as the Esperance port, which is a deep water port that has capacity of up to 20 million tonnes per annum, as well as 1 million tonnes of covered storage at port. Now, it's a government-owned port. Anybody that picks up the Lake Giles project also gets the benefit if they're first of the rail network and the port. Now, port and rail access is generally the most expensive capital component of any major mining project globally. And the fact that these assets exist for the benefit of a person that takes on the strategic role at Lake Giles is a very, very important point to make. The feasibility study identified through our metallurgical testing that we can produce a high quality 66.1% premium product, which goes into the pelletization of iron ore. And in 2019, we put in place a binding offtake with Glencore to support us in relation to the market. Next slide, please, Alec. Okay, so here's some of the project metrics. I won't walk through them all. You've seen it all in the study that was done. The project optimises, which means that you put in key parameters in relation to iron ore price, production price, transport costs, and the algorithm then determines if the project is feasible. And as I said, this project was determined feasible. In accordance with that, we've also produced our first maiden ore reserve of 237 million tonnes. You know, we've got healthy MPVs, but let me say that when we did the study, it was driven by pure commercial metrics. And what that means is that it would be trite for Macarthur Minerals to start to talk about a 10 million tonne production horizon, because the capital cost of that would be in the billions. So we limited ourselves to an initial investment capital of about a little over 5 million. Now that drove a lot of the metrics, because iron ore and magnetite production is all about economies of scale. And since that study was completed, we had some work done by SRK Consulting, and they came back and gave us some areas that we could improve or optimise the results from the feasibility study. And I touch on those a little bit further in the presentation. Next slide, please. So, you know, what we're talking about there is we have a cap of 3 million. We can upscale. We can look at other transport routes in relation to rail haulage versus road haulage. We have the ability to focus on one pit and to look at the opportunities to expand in Moonshine North. And there is potential for pelletisation, which also is a value add product, you know, which we could do with the project. But I won't dwell on that, because that's not for me to do the optimisation work now. That's for a potential strategic partner. Next slide, please. Okay, so here's just a tabular form in relation to the resource upside. As you can see here, we've got a generational supply, which I've talked to, and we do have a hematite resource, which, look, it's not large, but at the end of the day, if a strategic came in and wanted to actually just exploit the hematite in the short term while it was completing its work for the Moonshine Magnetite project, that remains feasible. Next slide, please. Other projects which we have, as I said, we're right next to Atlas Iron and BHP up in the Pilbara with our Australia's Gold asset. Next slide, please. We've also picked up an asset in 2017 from Atlas Iron, which they drilled 26 RC holes, or reverse cycle holes, and it's got a direct shipping small resource, which also could create some value for the company. Next slide, please. I see one of the questions people have asked is you know, what's going on with Infinity Mining? And let me be quite succinct. We've got a very large footprint in the Pilbara, over 700 square kilometres, focused in what we call the lithium region of West Australia, where the major lithium producers, Wodgina and Pilgang, Gora, potentially Tabba Tabba coming on stream, and Global Lithium. So, you know, we're right amongst that crowd. We've been focusing principally during 2022 and 2023 on our North Tambora project. We've got significant expressions of LCTs in the area, which is lithium, cesium and tantalum, as well as some rare earth elements, which we've announced to the market. Last year, we put out nearly a press release a week in relation to the active programs we're doing in testing that Tambora South for lithium, cesium and tantalum. Look, the market's a bit soft at the moment for that product, and as you can see, the lithium producers and explorers in the Australian market have come off quite substantially. But look, it's a cyclical market. You know, what goes down comes back up, and Infinity Mining is well positioned to take advantage of that. In addition to that, we ran 3 drill programs last year. We did a V10 survey, which is a electromagnetic survey. We did an ambient noise tomography survey, an ANT survey, which actually imaged down to post 500 metres the geology on our Tambora South project. We produced our maiden JORC inferred gold resource at 63,000 ounces in the Goldfields project, and we produced a guesstimate or an estimate exploration target for that region of up to 500,000 ounces. But as I said, that exploration needs to be had, and you couldn't rely upon a target at all. So that's what's happening with Infinity Mining. We've been very active in doing what we said we were going to do. And we've got during 2024, we've got 2 West Australian co-funded exploration programs, one for nickel and one for lithium, which we'll be looking to do when we can get back into the Pilbara. At the moment, it's hot and wet up there, so we're sticking pretty much to the East Coast. But look, that's just a quick overview on my behalf on the value that resides within Macarthur Minerals, and I'll just pass this back to Cameron.
Right, well, if I can talk about the value proposition here of this rights issue. If we take all the talk of upside and everything and just have a look at the company's balance sheet, the assets sit on the balance sheet at a book value of $80 million. We have a market cap of 20 million. There's a massive deficit in the difference between the book value and what we're trading at. In other words, we are trading at a huge discount to the balance sheet carrying value. In fact, in real terms, I've rounded that to 80 million, but in terms of it's 78.214 million. If you divide that by the number of shares, we have a backing there from our balance sheet of 47 cents a share. If you include Infinity Mining, it's 47.2 cents a share. So Infinity's only sitting there at 0.2 cents of per share of the value, but we're offering shareholders the opportunity to pick up new shares at 10 cents and free attaching options at 25 cents, and we have a backing of 47 cents a share off our balance sheet. We believe that is compelling. In terms of where we are in negotiating, we've actually been reluctant to break the projects up. Joe alluded to some early mining of hematite. We've now pivoted towards that, and we're talking to a couple of smaller operators that would be interested in exploiting the hematite in the short term. And we believe iron ore goes through cycles, and a lot of people have said to me, "Oh, you'll miss the cycle, you do this and do that." People who buy these projects don't buy a 10-year or 20-year or 5-year or 8-year project based on the spot price today and buy stuff at the top of the cycle. These things have to work through the whole cycle in downtime and uptime. When the market is good, you can retire a lot of debt. You can pay a lot of things off. Iron ore has been riding high, but these projects cost money to bring into production. Now, in terms of early production of hematite, the capital required to bring rail spurs and everything to the project is not viable. But interested parties have looked at, and we actually have some modelling around trucking the hematite to Kalgoorlie and putting it on the train to Esperance, and it actually works. We have some modelling around that, and we have a couple of parties looking at that. So whilst we might be waiting for a bigger partner with the magnetite, now they will come back into the market. I think a lot of this is government driven, and also a few of the people that have ventured into magnetite recently are having some problems with their project. If you read about Fortescue, they're having quite a few problems getting that iron bridge up and running. I think the latest was they had water leaks and it was going to do 20 million tonnes, and their forecast now from Iron Bridges are only going to be 2 million tonnes. That's their business, but they have a very robust hematite business, which their annual earnings won't be affected by any problems they're having with the magnetite. So while it might be some time before we get the deal completed with the magnetite, we are going to pursue the opportunity with the hematite, and there's a couple of parties already in the data room looking at that. Even though we were reluctant to split the projects, we will now look at that as an interim measure to bring cash into the system. But as I said, we've got asset value on the balance sheet of 80 million. We've got a market cap of 20. If all we're talking about book value, there's 60 million upside, and that equates to 47 cents a share, and we're offering shares at 10 cents. So I think that is fairly compelling. Now, Alex, if I could throw to you, you had a couple of questions.
Thanks, Cameron. We have had a couple of questions come through. The first one, now, if a deal hasn't been announced during the webinar, which it obviously hasn't, how far away are we from a deal that we're expecting in Q1 2024 as the date for a closed deal? How far away are we?
Well, the deal that we thought we would have closed in first quarter 24, that's pushed out. That party's put it on hold. It doesn't mean that we had not signed anything. We'd gone to exchanging term sheets. We talked about price. We talked about royalties. We talked about everything, but it didn't happen. They're still there, and they may come back. We are certainly not resting on our laurels. We're looking at other opportunities, but in the short term, it looks like we might get something going with the hematite. I can't say exactly when, but we have interested parties there. Another question?
I do, thanks, Cameron. Now, on an eventual deal with, on an eventual deal on Lake Giles, could the shareholder expect a special dividend?
Well, that really depends on the deal. It depends. If someone wants to just buy it and pay us a large sum of money, sure, we would certainly distribute that by way of a special dividend. If it's a deal whereby there's so much comes in up front and there's so much on first shipment and then it's tied to a royalty, there would definitely be an ongoing dividend, because we would distribute those royalties or a percentage of those royalties to shareholders as the project earned money.
Thanks, Cameron. Now, is Macarthur Minerals still trying to upgrade from TSX Venture to TSX?
The company is not presently actively pursuing an upgrade from the TSX Venture to the TSX. The decision's based on strategic considerations and current operational priorities, all of which are aligned with our broader objectives and the prevailing market dynamics. And we just don't think that is going to add value at the moment. You got another one?
I do, thanks, Cameron. Now, what would be the long-term plan of the company from a shareholder's perspective? Should they expect a dividend on a quarterly or annual basis, or at all?
Well, definitely. If we close a deal on Lake Giles and there's a royalty attached, we'll certainly distribute those royalties or part of those royalties by way of dividends to shareholders. And that may be the long-term value to the shareholders. On the other hand, if someone wants to completely buy the project and pay us what it's worth, obviously there would be special dividend and we would make a capital return to shareholders.
Thanks, Cameron. A couple more to finish. Does the company or board expect to refresh or renew the 17 million options that will be expiring in early April?
Well, the board has no intention of renewing the 17 million options issued as part of the private placement in March 2022. It's important to note that the ASX listing rules prohibit renewal of options without obtaining shareholder approval, a process that requires a formal vote at a general meeting. Therefore, the company will not be pursuing the renewal of these options at this time.
Thanks, Cameron. Now, is the government involved in any kind of subsidies for the company's green iron?
Well, I can confirm that we have not received government subsidies for its green iron initiative to date. We're always open to exploring any government initiatives and grants or subsidies, but at this stage there are none.
Thanks, Cameron. And one final question. Joe talked us through his view of Infinity Mining, but in your view, what's the plan to retrieve value from Infinity Mining, which, according to this shareholder, they believe it's losing value?
Well, it's tracking the market, and you know, a lot of juniors are in this position. I spent a lot of time in my former employment as a stockbroker. I've seen the cycle go up and it go down, and this particular sector at the moment, and I'll just pick an example of a company that's sort of close to us up there, where Mineral Resources recently took a 20% stake in a lithium project. It's a company called Wildcat. 12 months ago, it was 2 cents. In October, it was 85 cents and peaked at $1.03. Since then, it's been down at 40 cents. Today, it's up over 70 cents again. I'd be interested if someone could tell me where the trend is. But that's the market. That is the market. If you said to me, why is Infinity where it is? I can't tell you. If we as company operators, we have to concentrate on how the company operates and running the company. Yes, we need to be concerned about what the share price is trading at. If someone sells it down to whatever, we don't control that. And look, we don't know whether they wanted the money to pay their mortgage, or whether they have a margin call somewhere else in their portfolio, or whether they just want the money, or whether they're fed up with the investment. It's not something that we do an exit poll on everyone that sells their shares. And they don't flag. We get to see who sold their shares 2 days after they've sold them. So from that point of view, we're sticking to the strategy with Infinity. We're the biggest shareholder of Infinity, and as I said, it moves in cycles. Infinity, we raised money at 20 cents. The stock hit an all-time high of 39 cents. There was certainly plenty of volume going through at that point. You know, many people sold, took their profit, and have come back in again. So we're sticking to the strategy with Infinity. We have our 20-odd% stake. At this stage, we're not going anywhere, and we're certainly sticking to Joe's strategy. There could be some very interesting, we think we've got very, very valuable land with Infinity.
Fantastic. Look, that's all the time we have today. Thank you all for joining me, and I'd also like to thank Cameron and Joe for presenting and taking the time to answer some questions. Cameron, before I let you go, do you have any final comments to leave with us today?
Look, I would highly recommend the rights issue. As I said, it is tremendous value for shareholders to top up their holdings or maintain their position. It's very attractively priced at 10 cents as against a balance sheet of $80 million and a backing based on the balance sheet of 47 cents a share. With that, you get an attaching option. So if we're going to unlock some value, these things very rarely, once a transaction emerges, that's when you look at the value of these companies. And I don't need to go through the long list of every company that has sold a project or been taken over, that I can tell you very few of them don't get taken over at a significant premium to book value and their current share trading price. So there's a little investment tip, if you like, as well.
Fantastic, Cameron. Really appreciate you taking the time. And Joe, yourself as well, really appreciate the presentation. That wraps up for us here. Thank you, everyone. Have a great day.
Thank you.